Imagine this. The stock market is sitting near record highs. Investors are celebrating. Portfolios are green. And then, boom, one single number drops on a government website. And within hours, billions of dollars are wiped out. That's the power of the CPI report. And in the next few days, we're about to get a new one. So here's the real question. Will this CPI report trigger the next market crash? Or will it fuel the next big rally? Welcome back to Dollar Vest, the channel where we break down the markets in plain English so you can invest smarter. In this video, I'm going to show you why the upcoming CPI report is so critical right now, how it could move the market in either direction, and what smart investors are doing to prepare so you don't get caught off guard. Section 1. What is CPI and why does it matter? Let's start simple. CPI stands for Consumer Price Index. It's a monthly report that measures inflation, basically how much prices for everyday goods and services have gone up. If CPI is high, it means inflation is still a problem. If CPI is low, it means inflation is cooling down. Now, here's why Wall Street is obsessed with it. The Federal Reserve uses this number to decide whether to raise interest rates, keep them steady, or even cut them. And interest rates are like oxygen for the market. Too much, and the market suffocates. Too little, and the market overheats. One hot CPI number could send stocks plunging. One cool CPI number could send them soaring. Section 2. The current situation. Right now, the stock market is in a delicate position. We've had a massive rally over the past few months. Tech stocks are leading the charge, small caps are finally waking up, and even crypto is making headlines. But inflation isn't dead yet. The last CPI reading showed prices were still rising faster than the Fed's target of 2%. And here's the twist. Oil prices have been climbing, housing costs are still high, and wage growth is sticky. All of this sets the stage for the upcoming CPI report to be a make-or-break moment. Section 3. What could happen if CPI is higher than expected? Scenario 1. CPI comes in hot, meaning inflation is higher than economists expected. If that happens, investors will fear the Fed might keep interest rates high for longer. Higher rates make borrowing more expensive for companies and consumers. Stocks, especially tech and growth stocks, could see sharp drops. And don't forget, algorithmic trading systems react instantly. We could see huge price swings within minutes of the report. Remember 2022? A single hot CPI number erased months of market gains in one afternoon. That could happen again. Section 4. What could happen if CPI is lower than expected? Scenario 2. CPI comes in cool, meaning inflation is lower than expected. If that happens, investors will believe the Fed might cut interest rates sooner. Lower rates make it cheaper to borrow and invest. Good news for businesses and consumers. Stocks could rally hard, especially rate-sensitive sectors like housing, small caps, and high-growth tech. But there's a catch. If CPI drops too quickly, it could signal that the economy is slowing down more than expected, raising fears of a recession. Section 5. How smart investors are positioning themselves. Here's the million-dollar question. How do you prepare for such a high-stakes event? 1. Diversification. Don't have all your money in one stock or sector. Spread your risk. 2. Hedge with safer assets. Some investors buy treasury bonds, gold, or defensive stocks like utilities. 3. Avoid chasing hype. Right before big economic reports, many traders sit on the sidelines. 4. Be ready for volatility. Use stop-loss orders to protect gains and limit losses. And here's a pro tip. Institutional investors often prepare for both outcomes, so no matter what CPI says, they have a plan to profit. Section 6. Historical perspective. Over the last decade, CPI surprises have caused some of the biggest single-day moves in the market. From the crash of 2022 after a hot inflation print, to the massive 2023 rally when CPI finally cooled off. These moments are where fortunes are made and lost. If you think this is just another report, think again. The CPI has the power to change the entire market narrative overnight. So here's the takeaway. The next CPI report is more than just a number, it's a potential trigger for the next big market move. Whether we see a crash, a rally, or just wild swings, the investors who prepare now will be the ones who come out on top. I'll be covering the results live right here on DollarVest, so make sure you're subscribed with notifications on. Now tell me in the comments, do you think the next CPI report will crash the market or send it to new highs? Stay smart, stay ready, and I'll see you in the next video.